Hello, Kiola. Lucia here, property investment mentor and founder of the Finax Mortgages and Insurance. This is the recording of 1 hour live webinars. If you would like to join us in our next webinars and be part of the Q&A, please head to our website, luciaxiao.co.nz. I trust you will definitely learn a lot from this video. Thank you. So joining us today is Chartered Accountant David Han. And I'm just going to give you a bit of background of David. I think he got very good. Just allow me to go through this. So David actually graduated from the University of Auckland, major in both information management and accounting. And during his younger days, he volunteered himself as a free budget advisor for New Zealand Federation of Family Budgeting Services, helping people to learn how to handle their finances. And he is also trained as a business mentor for Business Mentor New Zealand. And David had more than 14 years of working experience with larger chartered accounting firms before he actually started his own practice 3 years ago. He is not your regular bean counter, but someone who has a genuine interest in your business. And furthermore, he is also a trusted business advisor that gives good, honest advice, which helps clients in estate and succession planning. Advise them on the best business structure to protect their wealth from unsuspecting or praying creditors as well. So over the years, David has assisted many property investors and developers with their projects, also providing business advisory services to small medium enterprise and specializing in compliance works in accounting and taxation matters. He attends to details and work closely with clients to help them maximize their potential, so they could have more time in creating wealth and spend better quality time with their family and friends, rather than bow down with back office routines and compliance works. He's actively participating in seminars, conferences, and courses as to remain updated to new tax legislations. So David actually focused on the 3 important areas. So business structure, wealth protection, and tax mitigation. So by doing this, with having the right structure in place, such as companies, looking through companies and trust, and proactive tax planning. So David actually speaks English as his first language, but he also speaks a number of the languages like Mandarin, Cantonese, and Hokkien. So there is no communication barrier and misunderstanding of facts. So with good faith and with good faith, he builds and maintains a warm, long-standing, satisfying relationship with his clients. Yeah. So let's welcome David. Can we have
Hi. Hello.
Yeah.
How
okay.
are you, everybody?
Yeah. So I'm going to pass on to you, David, and you can just start your presentation. So today you're going to share with us it's a wages subsidy. So I think we actually got some questions for you after that. Yeah. And for everybody, certainly just like, you just put your questions in the chat box and we're going to answer that at the end of the presentation. Okay.
Okay.
All
Thank you, Lucia. That's a very long introduction. Okay. Let me share with you my PowerPoint. I'm not going to maximize it because if I maximize it, then I can't really see the other screen. So you might see what's going on. Right. Even though I'm Singaporean Chinese. So if even though that we speak English, we do carry an accent. But the beautiful thing of being a Singaporean is that we understand quite a few languages, like different variation of Chinese dialects. But let's get back to this COVID-19 seminar. Now, just a bit of introduction about myself. I'm educated here. I got my degree in University of Auckland, and then I spent about 12 to 13 years in a chartered accountant practices, one in Ponsonby, one in Newmarket, and then I came out and started my own. I do specialize in small business enterprise. Got lots of property investors and developers as well. Then I was trained to look into basically the helicopter view of financial affairs. That means we don't just look at the numbers, we look at your intermediate details, such as your family arrangement, whether you have a relationship, whether you have children. Then that's to do with the planning in terms of understanding your financial goal, where you are at, and then how we can plan in terms of looking after your tax side to protect your wealth when you create the wealth. Just a bit on the COVID-19. I think everybody is pretty expert in how much you're getting. So a lot of people has already applied for the funds, and some are still thinking whether they should apply or not. So basically, it's available for all business owners, including sole traders and contractors, some charities, and some trusts. So we're going to go through the details of how you are qualified to apply or not. Now, when we talk about wage, and then there's another, when they started, there's a leave subsidy, but I'm going to cover that. Now, when they announced the wage and leave subsidy package, so a lot of people know about two figures. One is 585 and the other one is 350. Now, 585 is not exactly correct. It's 585.60 per week. So for the 12th week, then it's 7029 I think is 0.6. And then for 350, the subsidy amount would be $4,200 for the 12-week period. Now, previously, when it first introduced, it was kept at 150,000, but now it's been removed. Everybody knows that. Also, for the leave subsidy has been stopped. But if you have essential workers, you can still apply for it. Now, a very important concept is that whenever you apply for it, there are certain conditions that you have to meet before you can apply for it, and then you're bound by the declaration. Declaration is some sort of a contract agreement between you and MSD. MSD meaning Ministry of Social Development. Okay, the next one will be let's talk about the details, right? So your business needs to be registered and performing in New Zealand. So you can, so some cases where you are registered in New Zealand, but then your business is actually overseas, then you have to look closely whether you apply or not, you qualify or not. Now, your employees has to be legal. That means, so if they are not allowed to work in New Zealand, then you don't qualify to apply for him. But if you have any New Zealand employees, have a valid work visa, and say all those international students who are allowed to work, say for example 20 hours a week, you can apply for them. Now, the key thing here, it has to be affected by COVID-19. So if you can show a reduction of 30% of revenue, so not just a reduction of 30% revenue, but you have to link it to COVID-19. So it's up to you how you explain that, how COVID-19 is affecting your business. Now, 30% decline is, now there are two types. One is comparative of previous years. So for example, you have doing business for more than a year. At the time of application, that means when the wage subsidy is available between, I think, early March or mid-March. So it gives you, say, you're affected since January, February, and March, right? So you can use information from Jan 2019 and compare it to Jan 2020. So if you look at the two comparative, there's a drop in revenue. That's it, you qualify. The second thing, you need to link it to COVID, right? So for example, a lot of people are in the tourism industry, the hotel business, education, they are all in the news, they are all been affected. So write down notes how you're being affected and what your client base. Is your client base affected by COVID-19? That's why affecting your business. So just write notes. So in case of a MSD audit, then you can present the information to them. We'll come to that in details later on. So it's very important to start working on your memos to record for your record. Usually, in fact, you need to have all this condition before you apply it. And then the last most important intent is to keep the employee's name in the application, right? So again, there's confusion when we first apply for before 27th of March, because there's a lot of ambiguity. People are not clear what the government was meaning. Okay, best endeavors, what does it mean? So on the 27th of March, they released a second declaration, which makes it clearer what the government is expecting from you. So if you have time, go read the declaration. For those who have not applied, read the declaration and see what are your obligations before you apply. So you have to take steps to mitigate the impact of COVID-19. I don't know, as a business owner, the government is expecting you to approach the bank, talk to the landlord, talk to the insurance before you apply the subsidies. I think there's a lot to expect because things happen so fast that the employee needs to be paid and there's no income coming in. So I think in this case, you have to justify because it's things happening too fast and then your cash reserve is running low. So just say that you have really tried your best. So you have to look at your business. Okay, if there's no subsidy, what's going to happen? Are you going to make the employee redundant? So I do have clients that they react very, very fast to the pandemic because they are from China. They know what's happening in China. So just before government released the financial help, he already started laying off the contractors, the employees, because he's been through GFC before. So in those cases, the government step in and say, okay, if we come out with this subsidy program, if you are happy to bring in the employees, then you are eligible for the wage subsidy again. So just be aware that if you want to take back your employee again, you can. All right, there's a lot of confusion about the minimum of 80%. So that's where lots of disputes, lots of questions that you see in the social media, lots of back and forth. Some people that met in Facebook even approached Grant Robinson personally to clarify what they meant. So when Lucia invited me to do the webinars, I haven't stopped updating the PowerPoint. That's how fast things are changing. So after you attended the webinar, maybe things will change again. So just be aware. Now, just to let you know about the 80%, what's the when do you need to pass on the 585? When do you need to meet the 80%? When do you need to meet 100%? Now, number one, if you can pay 100%, by all means pay 100%, right? The employers are humans. They appreciate what the employers are doing, right? Now, the declarations expect you try to meet 80% if you can, because remember, you're affected by the COVID-19, your revenue is dropped 30%. So the government saying, okay, you cannot, rather than make the employee redundant, you have to keep them and try to pay them 80%. That means you have the option to pay 100%, you have the option to pay 90%, you have the option to pay 80%. You even have the option to pay 70% or 50%, not 50%, 0% above. That means you have to, the minimum you require to pass on is 100% of the subsidy you receive. That is 585.60 per week. to the employees, but you need to communicate with your staff. You need, because the staff is very intelligent. Okay, the staff say the company can afford, because the company is making tons of money. They have the cash reserve to pay us. So if they know the company's financials, then financial position, then they would argue that if you can afford to pay me 100%, you should pay me 100%. So that's about management. Okay, we'll go into the HR side later on. But just bear in mind that 80% is not a target, all right? Now, the next thing, okay, so everybody know about this, like if you're working more than 20 hours, I don't know how the MSD come up with this figure, but if you're working more than 20 hours, you get 55.8, and then for less than 20, you get 350 per week. So just remember that this is one-off. That means once you get the 12 week, and that's it. Okay, that's something that you need to manage for the next 12 weeks. So there might be changes later on when these 12 weeks run out. I don't know. Depends on the pandemic situation in New Zealand. Oops, sorry. Okay. Now, this one just now I've already discussed. So it's very important that employees cannot just terminate an employee when you receive the wage subsidy, right? So again, there's a lot of employers are holding off applying for the wage subsidy because of the obligation. Whether it's, okay, just be blunt, right? Whether it's cheaper to make employee redundant or to get the 12 week and then got to pay the employee 80% or whatever, okay? So if you were to apply, you cannot terminate the employee. But if you do need to terminate, or for whatever reason, or the employee resigned, you are required to return the subsidy to the government. There is email, and then you have to email them, tell them, okay, who's the employee, what's the ID number, and how much subsidy you're going to return, then you meet the obligation. So because there's so many employees applied for the subsidy and abused the system, I can't blame them, because initially it's not very clear. So some of them, they receive the subsidy, they reach 7 grand or 4 grand, whatever, and then they straight away pass on the 4 grand or 4 grand or 7 grand, straight away pass it to the employee. That's not how it works, right? It's not as simple. So that's why there's a lot of confusion. I'll try to clear as much confusion as possible, because I myself get confused by the things people say in Facebook. Don't rely on the Facebook information. Go to WIN's WIN's website. That's where you get the money from. A lot of people ask IRD. Okay, IRD is collect tax. They don't give you money, right? So you go to WIN's. WIN's is under MSD. MSD, again, Ministry of Social Development. So that's the minister overlooking the payment. And I've just got an email yesterday that they announced that names of the company will be published right in the website. So which means the employee who didn't get their fair share and wants to check the website, because the employers say, oh, I haven't applied for the subsidy, so you don't get it. Bye-bye, here you go. And then they check out the website. If they have applied, then they can stop the employer to Ministry of MSD. Again, if the staff is working, minimum or you can pay financially, you can pay 80%, you pay 80%. But if they are not working, then what? Right? So these are some of the common questions. So even if your business is operating you may still be eligible for the wage subsidy. So a lot of people thought, okay, you're not operating because of the COVID-19, and some employers might think, okay, because I'm not currently in business, so I might not be able to apply. But yes, you can. So just quickly mention about what's leave payment. What's the difference between leave payment and subsidy? Leave payment is about forced to isolate. Like right now, we are forced to self-isolate, and either they're sick themselves or they're looking after somebody who's sick with COVID-19. So initially, they gave you 8 weeks lump sum, and you can apply every 2 weeks. So now it's gone. So it covered all those part-time and casual workers as well. But if you're self-employed, not making the minimum wage income, then you do not qualify. I don't know how they're going to monitor this, because, but anyway, it's gone. So why the government removed this is because employers are very smart. They say, okay, I already paid the wage subsidy, but now you got a COVID-19, or you told me that you're going to look after your parents. They apply again, right? So this is to avoid double claim. So now, whatever you're getting COVID-19 or not, you're applying under wage subsidy. Yes. So this is something new. Essential workers. Now, this is to do with the leave payment. Although they scrape the leave payment for all general public, general employees, they are still available for essential workers. Because if I'm an essential business, and then this particular employee cannot work because of they're infected by COVID-19, or they are required to self-isolate, then why should I pay the person? So it's available for you to apply if these three conditions are met. That means they are self-isolating, and deemed at a high risk of contracting, or household members are high risk. So it's still available, but only for essential workers. Now, again, there's a lot of confusion surrounding what is classified essential, what is not. So initially, warehouse, they are deemed non-essential. But recently, if you heard the news, warehouse are able to operate again, but then it's only online. So it's some of the electrical appliances, non-leaming. They don't allow people to just go in and pick up stuff, but they allowed to sell, and they are allowed to deliver. Now, the same thing, the amount is the same. So same requirements, right? No difference. Now, this is raised by a lot of employees during the initial phase. So between the clarification, I think when you got the money, and then towards the end of March, there's a lot of mistakes. That's understandable. Now, you cannot make them use up their annual leaves. You have to talk to them, right? Because some employees, they want you to use the annual leave because they want the money, right? So say, for example, you have no more cash, and then you can only pay $585 to the workers, and then the workers say, "Oh, I cannot survive with $585. I need $1,000." Right? So what do? So you talk to them, say, "Okay, you got a annual leave. That's the best I can do based on the requirement. I meet the requirement. I can only pay you $585. But if you want more, do you want me to clear your leave?" All right, talk to them. All right, it's very important that you have to communicate with your employees. Now, I have a client who received emails from the boss. They don't communicate. No phone calls, no nothing. Everything is email and texts. He said, "Okay, I've got no choice. I've got to use your annual leave." That's not how you communicate with employee. It needs to be mutually agreed. right? So again, here I say option can be offered or requested by employees on mutual understanding current economic situation. Now, just before lockdown, a client called me in the last minute, and basically the GM and the in-house accountant kind of like gang up against the employer, which is no good. Remember I told you that if they know the financial position, they expect the company pay 100% rather than 80%. Okay, so in this case, it was revealed to the workers that they got to stay at home, right? They can't work. They're construction workers, but asking for 100% of the salary. And then I told my client, say, okay, do a 12-week projection, right? The money has stopped, right? Other than those receivables, that you have no money coming in, there's no job, then how are you going to, is it possible to stretch the money for 12 weeks? You still got rent to pay, wage to pay, insurance to pay, and all sorts of expenses outside wages, right? Can you afford to pay them for the 12 weeks? The answer is most definitely no. So I say you work with your in-house accountant, do a cash flow projection, and communicate with the workers and let them understand it's impossible to pay 100%. Right? If they want more money, clear their leaves. And then they came back to me and said, "Oh, most of them, they'll clear the leaves as and when they have the leave. They take lots of sick leave, takes lots of annual leaves." So what you gonna do? First thing, if you do the cash flow projection, you're answerable to MSD. You're not answerable to your workers. You use the cash flow projection to communicate with your workers, saying it's impossible, right? Then, okay, you tell them, work with them, and find out best solution. It's going to be very stressful for everybody, not just the employees as well. Excuse me. All right, all those employees that say they book 1 week holiday to Europe during the lockdown period, they can cancel. All right. So employers cannot say, "Oh, you cannot cancel. I'm going to use that to pay towards your wages." No, you cannot. You must be allowed. The employees must be allowed to cancel annual leave. All right, there's a lot of information on WIN's website. But if you want to you want to apply for wage subsidy, then you can click on this. And if you're self-employed, there's a separate application. So, okay, now comes to the practical side, right? Before you click onto that page, let me tell you from experience is that the page is a one-page forms, right? You can add employees, but then it's a one-page, very simple one-page form. Once you click submit, two things will happen. One is a page that tell you, okay, it's busy. We didn't get your application. The other one, we received your application. Thank you. Wait for news. Right. So it's okay that you're applying for one, but if you're applying for 10 employees, imagine once you click submit, it says, "Sorry, the net was too busy. We did not receive your application." Then you have to restart again. I want to tell you the tips, right? This is from personal experience because I did apply for some clients, but not all. That is to have the Excel spreadsheet ready. All right. Some of the information you need, you should know by now, right? The RD number, the NZBN number. I gave you the list, right? So you need all these things prior to application, and then before. Right, very important. Before you start filling up, click on this and then read the declaration before you submit the rest. Now, my tips is, okay, first, remember you have the proof that revenue is declined by 30%. Look at this. March 2019, 174. March 2020, 50. Right, so you don't even need a calculator calculate that it's more than 30%. And then have a spreadsheet ready, first name, last name, date of birth, ID number, where you can simply click, copy and paste, click, copy and paste. You don't see it, but that's where you, right at the bottom, that's where you fill up the employee details. All right, click and paste. Just in case you submit and then say network busy, we didn't receive your application, please try again later. You can do that again because you don't have to spend time typing, right? Just by typing, just by this tip, I probably have saved you half an hour to 1 hour each. Right, the next, now this is a summary, right? And you can call them, but good luck calling them because a lot of feedback is that basically they're too busy, right? I can imagine that they are very, very busy even now, right? So good luck trying to call them. Don't even bother emailing them. But if you're successful, they will send you an email. They say they're going to send you text, but I've not received any text, but I receive an email. Right, then email tell you blah, blah, blah. That you need to meet your obligation, right? Things like that. Now, the next. This is a screenshot. It's not the full declaration. Just to show you that once you click it, click on the declaration, it tell you whether you are eligible or not. Now, the government says they say work on a high trust scenario. To me, they're telling me that right now I don't have time to check you. Once this is over, I have the right to check you, right? So you still have to understand your obligation as an employer. Now, when I prepared this, I thought, I've prepared a webinar way in advance. Then who knows? There are so many changes after that. So now, just to let you know that the second version is available, but the first declaration is no longer available. If you compare, some accountants went through 3 days trying to compare the difference between the declaration, and then make the client even more nervous about the obligation. But there's no need to panic because my understanding is that the first declaration created lots of ambiguity, lots of confusion. The second declaration is more clear. Why is it more clear? Is because they try to fit in the details so that you are doing things by meeting the obligation, which is the government intent. Okay, government intent is very clear, right? Is to help the workers, not help the business. I'm not sure you're aware of that or not. Is to help the employees, not the employers. Okay. So there is a lot of question in terms of how it's been treated. Now let me tell you this, all right? Government has got the tax treatment incorrect, and because they got it incorrect, it creates lots of technical issues to the accountants, which is something that you shouldn't be worried about because it's our headache. Now, let me tell you something. Now, they say, okay, which subsidy is non-taxable? So when you say not taxable, right, you create an influx of people trying to abuse the system because it's not taxable. I can get the best subsidy and don't pass it on. What can you do, right? So now it says, okay, treat it non-taxable, no GST, and treat it as not taxable. So, but then when you pay out, then the employee is thinking, okay, I get free money, and then I pay out from my bank. Then all the employees, I get tax deduction from the wages. Correct? Wrong, right? So you cannot double dip. That means non-taxable money in, non-taxable money out. So which means you cannot claim the wages as subsidized by the subsidy as expenses. Now, the reason why I say they got it wrong is because in situation for self-employed, if you got a subsidy, when they say, oh, it's not taxable, no GST. So for self-employed, they heard the first thing, they forget about the rest where they trying to say, okay, for contractors, for self-employed, you receive money, that is taxable. So that's why I think it's really, really silly for them to straight away jump out and tell Deloitte, the Big Four, saying that it's not taxable. I've got tax specialists straight away tell us that this is supposed to be taxable, and you have to add GST to it because there's established tax laws that say so. Now, in order for this to declare as non-taxable, no GST, the IRD has to go through the procedure to what we call order in council. That means they have to make it a law saying that, okay, this wage subsidy is a special kind of income, so you have to treat it as no GST. So they have to come up with a special law to override what's been established in the tax law. Now, I'll come back to you in terms of situation where a company has shareholder employees that's gone through the provisional tax system, and what about those paid employees? So if you paid full salary, say for example 1,000 or 800 instead of 585, how you're going to do it in terms of counting treatment? So I'll come to that later. Now, I mentioned earlier that you have to start doing documentation, right? You have to, start doing all these things during the lockdown. Now, and this is quite. I've been a big advocate of having a timely financial statements. That means that you know your financial position as and when you need it, not wait until once a year you send it to the accountant and the accountant do it for 2-3 months and come up with financial statements. Okay, sign, and then this is how much tax you pay. This is reactive. It's not proactive. In this scenario, you need to be a bit proactive because you need the information right now in order to apply for wage subsidy. Imagine you have all the bank statements, you haven't even consolidated all your shoebox receipts, you haven't depreciated the what do you call the assets of bringing this and that, or you haven't tidy up your accounts receivable. So it might take you some time before you know your financial position. But of course, in terms of the revenue, that's easy, right? You just have to do comparison. If you have your GST return done every 2 months, you just have to add them up, provided you have access to the last year's information. So remember, it's month to month, okay? Month last year compared to month this year. Is there any drop? If there's a drop, okay, you qualify. All right, so I mentioned a few times that there are people who abuse the system, and because of people abusing the system, now the government is coming up with new laws, new clarification, a lot of new stuff try to curb this. And by publishing the employees online, they are inviting employees to notify them, and they'll audit the employers. So just be careful. Now, this is what I've told you. I just got this email yesterday. So they're going to publish names, and then mention about declaration, this firing warning shots to employers. Okay. So they're going to talk to and compare notes with inland revenue. And after they sort out the limited companies or trust or whatever it is, they start publishing sole traders, right? Contractors. All right. So just be warned. Now, I have to go through this because as an employer employee, you need to understand this, right? So even though it's excluded income for business, you cannot make a tax deduction for subsidy paid to the employee. Then whatever paid to the employee, the whole amount, doesn't matter whether subsidy or not, the whole amount needs to pay the taxes. So basically the government is going to recoup some of the money that they pay out. So it's recycle money. Assuming 20% recovery, so every 1,000 they pay out, they get $200 back. Right, so now don't worry too much about grossing up the wage subsidy. I have seen conversation that they pay out 585 net to the employees and not have any tax deducted. I think there's a lot of these cases happen. Now, just pay as per normal. Don't try to delay, because anybody has done payroll, you know, once you make a mistake, it's very, very tedious to get it corrected. The IR, the new system is making it a lot simpler. But my recommendation is always use a payroll if you're hiring even 3, right? Because payroll, try to use software. It's not very expensive, but you know, some people think that they can go back the old ways and start using spreadsheet. So my advice is just use payroll, just pay and let them do the calculation. Now, what happened is that some businesses, they received the $7,000 per employee before end of March, and not knowing that they're supposed to spread the payment to 12 weeks. So what happened is that 7,000 in, 7,000 paid to the employee. You have a serious tax implication. Now it will affect your or your employees' family tax credit calculation. Once you do that, their student loan will, basically the employer has to pay more student loan because of the 12%. And potentially you might use the wrong tax rate. Potentially this might affect your pie. Remember, pie is determined by your income. So if you're on the low income, maybe you're using 17.5. But because straight away you paid $7,000 to you, it might push you to the next limit. That means you might be, they might send a letter saying, oh no, you're going to start using 30%. All right. So these are things that things happen too quickly. Nobody really sit down and think about it. Now, trading trust is an interesting one, right? So in case you guys are not aware, there are people using trust to trade. So there are people using trust to do property developments. There are people using trust to collect commercial rents. There's a lot of different reasons why people use trading trust. Most of the time, they use it for tax purpose because it's quite flexible. Now, just remember that if the trust is not paying a paid employee, then most likely you cannot apply the subsidy. If you're making annual beneficiary distribution, but it's not a how to put it, this is not a regular thing. That means when the trust is making money, then you pass on some beneficiary income to them, then it's not seen as a wage. Then you might not qualify. So if you're making beneficiary distribution, then it's not qualified, all right? But if you're paying somebody professional to work for the trust on a regular basis, then yes, you can apply. Now, these are accounting terms like special purpose financial reporting and GPFR, that means general purpose financial reporting. Most of the financials we do are SPFR, that means special purpose reporting, strictly for tax purpose. All right. So don't worry too much about applying your accounting policy. You don't need to know too much about the specialized field. But what I need to advise those bookkeepers, accountants, or employers that the correct treatment when you receive the 7 grand, say for example, you receive the 7 grand on 31st March 2020. So you haven't started using the wage subsidy. Prior to that is using the normal payment, right? Now, after you receive the 7 grand on end of March, where should it go? If you put as non-taxable income, you need to adjust it back non-taxable expense because you have received something. You cannot just hide it under the carpet and carry for next year, become a retained earnings. That doesn't work that way. You need to apply to the wage. It's something like something to use up. It's like what we call a deferred income. So deferred income is not non-taxable income. It's basically, it sits in the liability. And then as you apply the wages, apply the 585 per week, you use up the deferred income. Right. So in our point of view, it is an income, but if it's not taxable income, then when you apply the subsidy, it is not a taxable expenses. Simple as that. Government has said that. It's just that the treatment is incorrect. So it sits in liability, and then slowly release. Guess what? It's not offset against the wages because it's not a good idea to offset wages. Remember when we report the inland revenue, we see the gross, right? So the gross wages paid should match with your financial statements. If you were to use it to offset, then it doesn't match. It'll be reduced by 7 grand. So for example, you reported 60 grand in the PAYE, but then you offset against your subsidy, become 53,000 in your financial statement. It is not a good practice. So either it's a contract expense or we just reflect in the income. So our institute recommend us to call it a wage subsidy income. It is still income to the business. You got it? If you don't understand, just leave a question for me to look at them. Oh, this is an example. I hope that you guys can follow. Imagine you have a full-time employee and gets $1,000. The payday is every fortnight, and then after discussing with the employee is happy to accept 80% for the next 12 weeks. So he's supposed to get $800, right? So the subsidy received is 585 per 585.8. Now, when the money is received end of March, we record it in debit, bank, credit, wage subsidy. So it's a current liability. This one sits in the bank. It's money. All right. I also heard people transfer the money out to another bank. I don't know why people do that. Right? It's like hiding the money somewhere. Don't do that. Just leave it in the company bank account. So the first payment, which is on the 13th of April, it should be on 14th, but doesn't matter. So 80% of usual 1,000, that's $800. $800 times 2 is 1,006. So remember which we need to record full gross amount. Forget about KiwiSaver and whatnot. Okay, this is going to complicate the calculation. So bank come up with 1,395 because we need to recognize the PAYE liability of 204.82. So these two add up will equal to 1,006. So on the same day, you need to record your wage subsidy. Record how much wage subsidy has been used up. So because we can only apply 585.60 times 2, all right, times 2 we get 1,171.60, and then offset against this account. Remember this? Oops. Offset against this account, right? So this one offset against this account, reduce this, and then we need to set up another account called the other income liability. And sorry, excuse me, not other income liability. It's other income. It's a revenue income. Other income, but no GST. So this one will record as a income. So it's like negative expense. So that's negative expense could be treated as a revenue, right? So the profit treatment is better that way. But if you want to offset against wage, by all means, you're not wrong. It's just that for presentation purpose, it's not good. Now, I'll give you an example. Say a shareholder employee, okay, one sole director shareholder which work. Okay, I'm not talking about those shareholder employee that doesn't work. I'm talking about shareholder that works, right? They work in the business, one shareholder employee, and because he doesn't pay tax until year end, so he doesn't pay himself PAYE, but pay tax based on the residual profit. He has a part-timer, right? The part-timer is less than, when I say part-timer, that means assuming it's less than 20 hours. So less than 20 hours, they get the wage subsidy is $350, which is more than $200 a week. Now, if you have if let's say you have 2 workers or 3 workers, whatever, you are allowed to pass the wage subsidy to another employee. You are allowed, but just remember, any unused portion you need to pay back MSD. So instead of payback, instead of having unused portion, there's no reason why you cannot use it to subsidize yourself, correct? So now, in terms of sole trader, right? Remember that sole trader apply for himself. It's 7,000, and the part-timer is 4,002. So add up together is 11,000, and then you record it as a liability, right? First one is 400, because $200 times 2. There's no need to reduce his wage because it's under 350. So up to 350, you have to pay 350. Then in this case, we have to recognize the shareholder expense. So remember, normally we recognize the shareholder expense, recognize the income at year end. But in this case, we have to start accruing and accounting for all the wage subsidy, so that nothing has been left. All right. So because it's taken off your bank, so you credit your bank and credit the. This is assuming it's 265. The calculator. So in this case, we are using up the wage subsidy. Okay. To recognize the 2 weeks wage subsidy. Okay, so we are applying the wage subsidy on other employee. All right, so which is the shareholder employee. So we are using up, so we have to recognize it. All right. All right, I'll come back to you on the questions. All right, if I can answer, I'll try to answer. But let me finish up the slides. Initially, when Lucia contacted me, it's only like 20-25, but now I'm going to add up to, say, I think about 40 plus. There's so much information. Now let's talk about taxes. Okay, this is my forte. All right. Basically, IRD has come up with not IRD. The government has come up with plans to relieve the business. Now, everybody should know that if your tax is more than 2,500, then you trigger prof tax, right? Now, for 2021 tax year, that means from 1st of April to 31st March 2021, if your residual tax is less than 5,000, you don't have to pay provisional tax. That's actually reduced that should happen long ago, all right? Because 2,500 is so easy to breach. So from now onwards, it's all 5,000. Once you, somebody asked me, does it mean that for 2021, do we still have to pay prof tax? Yes, you still have to pay prof tax. So prof tax threshold means that happens when you finish your 2021 financials. So if you receive a reminder saying that you got to pay prof tax, we'll come to that about whether you want to pay or not. Now, small asset depreciation. Okay, this one please be clear, because I don't create misunderstanding. Okay, for those business owners, if you bought an asset, okay, don't ask me whether it's asset or not, because that's quite straightforward question. If you buy a car, don't tell me it's expense. Okay, car is a car. So if you buy any asset like a computer when price is more than $500, say for example, you buy a computer for $800, that's more than $500, then you have to capitalize it, treat it like an asset, and depreciate. But if you buy a monitor screen for $499 plus GST, if you're GST registered, that's less than $500, then you can expense it, treat it like a computer expense rather than treat it like an asset and depreciate. From now onwards, the $500 threshold is moved to $1,000. This one should happen long ago, right? $1,000 is nothing, right? So why this is a good news for businesses? Because you can expense things rather than capitalize and drip feed your expenses. Just for next financial year, you have a one-off position that you can expense anything less than 5,000, only once in 2020 year. So for example, you need to buy a van. Try to look for a van for $499 or $4,008 rather than $5,099. All right, or this is an absolute perfect time for you to bargain with the car dealer. Okay, $5,005. I'm not going to pay you $5,005. I'm going to pay you $4,008 and bargain up to less than $5,000. And then you can expense the whole vehicle rather than capitalize it. We'll come to that, because if you expense it, then there's no FBT issue, right? That's one of the benefit of doing that. Allowing depreciation on commercial and industrial buildings from 2021. All right, recently there's a big shift of investors moving from residential to commercial because they don't want to deal with the new Healthy Homes Act and those stupid all sorts of regulation, underfloor heat insulation. You got to put a heat pump. So this is meant to be helping the commercial landlords. So they want to release the depreciation claim from 2021 onwards. So all those clients, all those people who owns commercial or industrial buildings, that's good news for you. Typically, you have 2%, but some buildings they have more. Go check either if you have an accountant, check with an accountant, they'll do it for you, or check with RD website depreciation rates finder. Then you can find all this information. Now, in work tax credit, all those who have working for family tax credit, probably you don't understand there are 4 different types of tax credit. I think it's super silly to make a benefit system so complicated. But it's kind of a test, right? If you're in work, that means both parents work more than 30 hours, you qualify. But if you're a single parent, you work more than 20 hours, you qualify. So they're going to remove this from 1st of July 2020. I don't know why they're going to remove. Why not 1st of April rather than 1st of July? So I don't know how we're going to calculate whether they work, in terms of hours. So whether they qualify from May, June or not. Because for us, we just plug in the numbers whether they qualify or not in our system to estimate. Anyway, that's something for you. Okay, Inland Revenue Department has released. Sorry, Lucia, how much time we have?
It's all good. Yeah, you can just continue. Yeah.
Yeah, I think it's a bit long. Eh?
That's
okay.
Right. Yeah.
Okay. Now, IRD has some financial support. Again, is there if you need it. If some of you might think that you approach the accountant to help you, but a lot of things you have to approach Inland Revenue yourself. But hey, talk to your accountant. Some of them might be able to help. Now, families, that's family tax credit. KiwiSaver, you can apply for KiwiSaver holidays. That means you can ask for to stop paying KiwiSaver. Student loan deduction exemption, again, all this, if you're affected, you don't think you can pay, you can ask them directly, and then they can apply, they can look into your case. Now, certificate exemption, this is to do with contractors who are required to do a 20% withholding tax. You can ask for certificate exemption. Now, depreciation, low value asset, we have to talk about. And okay, now difficulty paying tax. Now, government has come out saying that you can ask to write off penalties and interest. One thing I'm not sure is whether is it going to be a standard. There's no penalty and interest if you don't pay or pay late, or you still have to apply for it. That I'm not quite sure. It's just a lot of people are feeding different information. Now, so I think we've talked a lot about all this FAQ, but if you need me to go through, then I can. So the PowerPoint will be available to you. Just send me an email. I don't know is there any means to send bulk emails, but I'm quite happy to give you the information so you don't have to take notes. See, all this FAQ I didn't invent, so basically I just plug in from some other website. So because there's a lot of different scenario, different cases, so I can't answer everything for you. Now, this is my recommendation, right? When it comes to crisis, then you realize the importance of having a timely reporting system, right? I'm a big advocate of having a particular software that have information ready on a timely basis. For example, you can use Xero. And I don't recommend people do manual payroll because 99% of the time you get it wrong, right? So the spreadsheet can only calculate the tax liability, but it doesn't doesn't help you with the keeping track of the annual leave and sick leave. And if you look at the that means the Holiday Act properly, then the payment that you pay is not necessary. You might think that when they take the annual leave or they take whatever leave or they want their leave cash out, how do you calculate the amount to pay? It's not based on the hourly rate. It's based on the average of 4 weeks, or some even ask for average of 12 weeks. So we can't possibly to spend so much time on payroll, right? Let the software deal with it, right? And now, later on, I'll cover a bit on the landlords and the banks because there's a lot of information going around. Say, oh, don't pay your commercial landlord. You don't have to pay because you don't have access. Right? I don't recommend just don't pay because it just creates massive tension between you and the landlord. But on the flip side, some landlords purposely do not respond to tenants asking for pay reduction. So in that sort of situation, then you try to give them a call, try to talk to your landlord, or worst to worst, go through a lawyer. Before you go to a lawyer, understand your lease first, right? So I've got a lease here, and some are using the correct ADLS lease, some are not. A lot of the lease, they just photocopy, put a new tenant, photocopy, put a new tenant. They do not have the updated lease. So you sign a lease which doesn't say that the clause 27.5, which is the one that a lot of tenants are relying on, is that if we are forced not to have access to the office, so we don't have to pay the rent. For me, I have a lease that doesn't have that. I don't know what sort of lease, very, very thin, very, very simple, shortened version. So I have no choice but to approach the landlord, or can I, everybody's suffering. Can I have access to the office? What can we do to help each other? Then my landlord say, come back really quickly. Say, I still got bills to pay. I still got mortgage to pay. I still need to feed my family. How about I give you 50% off for the next 3 months? Now, that is nothing. That's better than nothing, correct? Because I don't have a clause that protects me, right? So the other one is talk to the banks. You can speak to Lucia about your needs. Typically, we'll come back again on the 6-month holiday. Is not actually a holiday, but I think Lucia explained to you about it's just a deferred payment. So now you have to think about this, make full use of this 12 weeks or 4 weeks to think about your strategy. If let's say we have time, then we talk a little bit on the strategies. Again, I have resources that I can just give it to you for free and just have a look. And if you need to talk to me on the phone, by all means, because I'm at home, but that doesn't mean that I'm not working. It's GST period, so but I'm quite happy to answer any question you have. Now, if you have to ask yourself whether you come out, how are you coming out? How's your business coming out? Whether you can survive after that 12 weeks, right? So that subsidy is in and out. It doesn't go to your pocket. So you still have expenses like insurance, business, whatever, right? You still have your own mortgage. So you have to talk to your HR person and discuss your option. It's a very specialized area, and don't expect your accountants knows about it. This is either employment specialist or employment lawyer that can help you with. We can give you our opinion, but then that's shouldn't be treated as a professional advice. All right. That's my contact, and then let's go to the questions.
Because Bruno was asking, like, how about those working casually get paid? Will they get paid if someone actually, the casual workers, do they get paid?
Where do those working casually get paid? Yes, you can apply for them, for casual workers. But I'm just a bit concerned that there might be double dipping. In terms of if you're casual workers, right, you're getting the grant subsidy to pay the casual worker, but then the casual worker might be working for somebody else, and then they might get the subsidy again from the other employer. So yes, you can. The laws, the scheme allows you to. So casual workers, it depends on your usual wage, right? Usual wage. So it depends on whether how much they are getting. Now, this is something to do with businesses less than 1 year. You do not have a comparative figure for you to prove that your revenue has dropped 30%. So that's where the cash flow projection comes in handy. So you need to do a bit of work in terms of your memo, saying that okay, if that's your business seasonal, then you should have some sort of projection that okay, by December I should make so much money, by March I should have made X amount of sales, but because of COVID, the customer has cancelled order. So if you have keep records that the customer has cancelled your order, right? So all this cancel, even though it's loss of income, but it can substantiate your sales forecast. So you need that to prove that your business is affected by at least 30% by the COVID-19.
And I guess that if it's like if we can get out of lockdown earlier, and then like the customer actually being able to run their business well, and if their actual income is more than their predicted reduced income, I guess they will have to pay it back. I think that's quite clear in your presentation. We'll talk about like if it's you overclaim that, you had to pay back. Yeah, right.
Yes. So if the employee resign or whatever reason you didn't utilize your subsidy, you have to pay back. Yes.
So can the shareholder claim the wages subsidy? So
I think I've covered that.
okay.
Yeah, you have to be working.
Okay.
So Bruno, to answer your question, some people apply and receive within 2 days. Some people apply until now, they haven't received a single cent. So Winch is trying their best to push out the money as soon as possible. So there's no point calling them or whatever. A lot of people are stressed because they don't know whether they receive the money or not. So they are improving the system, because once you apply, usually expect a confirmation email from them, but no, you probably don't receive anything until they pay you. Should subsidy be paid to employee from lockdown day if the business closed from 24th? It should be paid from that date. Now, again, this probably you have to, I don't know whether you're using payroll software or not, but you have to pay as per normal. When I say pay as per normal, that means depending on your pay period, because everybody's pay period is different. Also, I have resources to send you guidelines from Smart Payroll if you want. Now, it should be paid from that day. No, you don't change your pay cycle, right? You don't change your pay cycle, you record. So once your business is not operating, so again, I'm not sure whether can they still work from home or totally no work. So if they are not paying, you have to pay them minimum at least the 585, because there's no income coming in, right? Just now I've touched on, if you have the financial, you try to pay them 80%, or you can, based on your cash flow projection, you might only be able to pay 60%, for example.
Why has an annual shareholder salary of 20K, works more than 20 hours a week, but does not pay PAYE? Will she qualify for the subsidy? It looks like it is, isn't it? Yeah.
Yes. 20,000. So 20,000. That's
kind of more than the subsidy will be more than 20,000 now. So does it mean that they had to pay back?
20,000. That's a good question. Is it 20,000 each?
It looks like she just get paid 20,000. She's a shareholder. She get paid 20,000. Yeah.
I think you have to ask whether is she actually working or not. If that's just part of your profit mitigation purpose, then it might be a bit tricky. So if it's more than 20 hours, so assuming 20 hours, 20 times, you have to meet at least the minimum wage. So that is not meeting the minimum wage requirement. I think you might be safer to do the minimum one.
350.
Because one thing they might look at is that you pay the 20,000. To me, it might be to do with profit mitigation purpose. So that's a good question. That's something that I need to look at. Okay, Mike met.
Oh no, I think that's all right. I think Mike was asking whether we can, because you are the accountant, is there anything that you might be able to give the property investor? Because we have quite a lot of property investors online with us. Yeah. So is there anything that any advice you could actually give us?
Is it to do with just property investing?
Yeah,
or
yeah.
Nothing to do with corporate, right?
In a property investment accounting, yeah.
Yeah, that's quite straightforward. Yes, I can do that.
Yeah. I mean, yeah, so we probably will run another session or something, because I think property investment accounting is a huge topic. And it's we might have to split to a couple, sessions, because you probably won't be able to cover in 1 hour talk about wage subsidy. But I like to actually just summarize what David. Thank you so much for it. But I think because the things, those just some points I picked up is the company need to be registered and also had to be operated in New Zealand. And
yes.
It's kind of like anyone legally working in New Zealand, they are all qualified. So that's including people on the work permit or like overseas student, if they are actually, because they're allowed to work up to 20 hours per week. So they are all qualified, And then also another part is as an employer, you should always give them the full 100% payment. 80% is really just being a minimum, okay? And also, communication is very important. So as an employer, if you are running your own business, always talking to your employee and then let them understand where is your company's financial positions, and just work with the employee, so communication, always communicate with your employee. And I think the purpose of this subsidy from the government is actually encouraging employer to actually keep the employee in their business. Okay. And then another one is they do publish the name. Whoever actually claim for the wage subsidy, it will be published on the Ministry of Social Development website. So if people are interested, you can always go and look it up. And they are not doing any audit right now, but they certainly will be later on. So that's a very clear message there is later on they might decide to do audit and then make sure that you actually got some record there. You actually explain why at that time you applied this, either it's your income from January to June in any 1 month compared to last year, you actually have, your business actually revenue has declined by 30%. Or your prediction income. So basically make sure that you do keep the record. And also pay your employee as normal rather than a lump sum, because otherwise it's going to mess up their a tax rate. And also is you allowed to transfer the subsidy to other workers, or if it's or you had to pay back. So I think that's another things I picked up. And also the asset depreciation. So that's now it's actually going up to $1,000 now. And my understanding of because now we actually in the financial year 2021 now, right? And basically that's actually, you can actually, so basically that can go up to $5,000, that depreciation, the asset, but it's only just one item, is it? It's not you can actually put it under the expense multiple items. It's only one item you can claim. Is that up to 5,000?
There's a concept called pooled assets. That means when you purchase, you're not purchase everything. They look at the whole bill. So try to get separate invoices and pay separate day.
Oh, right.
Does it make sense?
Yeah.
So if let's say I'm buying say a computer, 2 screens, everything is over 5,000, then I don't get to expense it. So you can go a few times. It's better for you because you buy 2 monitors, it's less than 5,000. Buy 2 computers, less than 5,000. You can expense it.
Okay, so this is another tip. Okay.
Then we try to avoid giving. Because you look at the invoice, if the combined invoice is more than 5,000, it's harder for you to try to split them.
Okay. So that's just a good tip that if you are running your own business and if you had to buy some either computers or cell phones, things like that, try to actually having a separate receipt rather than just one receipt. And then so most likely you could actually having that. You can actually come in under the expense rather than actually become the depreciation, And I think another thing David also covered is the lease. So this one just share some our personal our because we own the commercial lease, So we own commercial lease. So what happened to the lease manager actually come back to us and say they're going to waive 1 month lease for us, but they what they did is actually going to be 50% in April and 50% in May. So we still have to pay them, but we just get them they will refund 50%, 50% in April and 50% in May back to us. Yeah. So if you're on commercial lease, always talk to your landlord. And I think very often it's probably a standard clause in your lease agreement. If it's not, always talk to them anyway. Yeah. And David talking about the presentation and the resources. So we do have those we do have those copies. Yeah. So we can actually email to your guys if it's you wanted. Yeah. So we will actually just put it in the email together. So it's quite a lot of. I didn't realize actually quite a lot of information in this wage subsidy. And thank you so much, David. Yeah. Just let's see. Have we got more questions? I think we're pretty much done it. Yeah. Yeah. Is there anything else you'd like to add, David? Yeah.
I think.
Oh, we got your contact detail.
Everybody's business owners.
Yeah. Okay.
So
when we send out an email, we were including David's contact detail, and I think I emailed something before, but I will also including in the email that we're sending out. So for some of you that you want to reach out, and David actually been doing a very good offer with us. So just remember to mention, you are actually referred from us, and I think he's doing this like a free consultation, isn't it? Yeah, David. Yeah.
Consultation. Sometimes we say 1 hour, but usually stretch more than an hour. That's free. As you understand nowadays, you can't come to the office, so we have to do video conferencing if needed, and we can do that and can give you free advice on how you can tidy up your tax affairs. Now, second thing that I'm offering to Lucia clients is 50% on first year.
Yeah, so thank you so much.
Yeah, 50% is what your current accountant is charging. But don't come to me. When you're getting your accounting to do is only one property, then when come to me 10 properties, that's a different story. Yeah. So whatever accountant is charging, it's not I want to take their business. It's just that just to give some incentive to Lucia's clients. Because Lucia has been very, very helpful, and I know Lucia care a lot about her own customers, so I hope that I can do the same to her customers as well.
Thank you. Yeah, and just let you know, we don't get there's no referral fee or whatever from David back to us. So just feel free to actually contact him. Yeah, because I think he's there just want to help out anyway. Yeah, and so enjoy your weekend, and so I see you next week. Yeah, so we're going to run this every week. Next week will be a lawyer. Yeah, so I'm going to see you next week. Yeah. Okay. Have a good day. Bye.
See you. Bye bye.